Hello, hello. Hope you guys are doing well. Hope you guys had a great weekend. Back on YouTube with the community. Glad to be here, guys. Hope you're doing well. Give everyone a couple more minutes. I think the live transmission just started a couple minutes ago, whereas we have been live for the usual 5-minute countdown to let everyone get in, get sorted, but no worries. So let's give everyone a couple minutes and we'll get right to it. How are you guys doing? How's your weekend been? And how's trading been? It's been a month since we've been live on the YouTube. We got our sell side targets hit on US dollar. Ahmed, welcome back, Dylan. Hope you are well. Yes, sir. I'm doing good. Hope you're doing good as well, brother. Book profit on the oil swing shorts. Finally, sell side delivered. Awesome, man. Yeah, order flow stayed heavy, and they took it down into the sell side. Nice to see you banking on that, brother. Keep killing it. Jesm, hi from Albania. Awesome. Where are we tuning in from today, guys? As you guys can see, I'm back in the beautiful USA, Florida. Matthew, let's get to work. Absolutely, brother. Momentum Trader, what's going on, brother? Hope you're doing good, my man. Glad to have you. Unicorn Queen, hello, hello. Cyclops, my man. Faisal, hello, Professor. Hello, hello. Tommy, glad to have you back in action, brother. Happy to see you're feeling better and back to business. Tommy, as you guys know, he's one of the analysts on my team. Absolute monster trader. Just so you guys know who my man Tommy in the chat is. Eslam, welcome back. Glad to be here. Glad to be here. Glad to have you guys. Matthew Davis, let's get to work. I'm ready to get down to the business. Absolutely, brother. Absolutely. SK, hello, hello. Ahmed, London, tuning in from London. All right, good deal. Good deal. Yeah, you guys have been having pretty good action in the London session. Amy Moore, welcome back. Glad to be here. Appreciate you guys welcoming me back. Like I said, enjoy coming out on the YouTube with you guys here on Sundays. Med going to Medellin soon. Hey, that'll be a blast, man. Hey, well, if you're on that side of the pond, Med, you got to hit me up, man. I'll be in Latin America some myself, so maybe we'll have to get in touch, brother. Denisha, happy Sunday, A-Team. Glad to have you back as well, Denisha. SK, thanks for the live. Hey, glad to give it to you guys. Hey, May, Florida. There you go. Matthew, would love a quick update on your trip as a company in Panama. Absolutely, Matthew. Would love to do that. I'll get into the personal side of things after I get through the business. There's a lot of people that are here. They're just here for the money-making shit. And then I'll get into the details. Absolutely. Business is booming. Things are going forward. And Adora trading to the moon, right? Carla, hello, Dylan. Let's get it. Let's get to it. Matthew, did things go well? Anything in store in the near future? Oh, yes. Big, big prospects for the near future, brother. Absolutely. I can touch on some of the things that are solidified, but there are things that are still in the works that I still got to keep the lid on until we get things formalized. But absolutely, man. Big things coming. Big things coming for the trading community and for all those that you guys know who we serve, right? Those that want to learn how to make money from the markets consistently and eventually get to a point of replacing your job or doing it full time, right? And we got some heat coming out for those of you guys. SK, can you increase volume? How are we doing on the volume? Abraham, can you give me a check on the volume? I don't want to go through this and then realize the volume's not good. You guys let me know how the volume is, or maybe it's just this one individual, just so I can make sure. Lucky Cat, hoping for CL, GC. Volume all good? All right, thank you guys. All right, Lucky Cat, looking for crude oil and gold and YM. You're tired of Nasdaq. All right, yeah. After the review, when I'm asking for questions, go ahead and share that in the chat, and I can come back to it. And I'll hit gold. I'll touch on crude oil anyway, but I'll touch on gold as well. Yeah, absolutely. In addition to Nasdaq, but Nasdaq's the best one, man. Come on. Volume all good. Appreciate you, man. Thanks, Abraham. Ahmed, thoughts on ICT returning to Twitter? Yeah, it's all good fun. It's all good fun. But in my opinion, if you're not at a point where you're making money, you definitely don't have an hour and a half, hour to fuck around on Twitter every day looking at bullshit. But hey, if you're just enjoying, hey, not to say you can't enjoy life, but if you're still not profitable, you're still not making money, I would say goofing around with ICT on Twitter probably isn't the way to get there. But it's all fun. It's all good fun. Glad to see my man ICT back on Twitter. And you can see the rats. They're all running. Ahmed, YM, S&P all-time high this week for sure. Absolutely, yeah. We'll get into that for sure. And what'll confirm getting to all-time highs, definitely. Joel, good Sunday, Dylan from Texas. Ready for another disciplined and profitable week? Absolutely. NQ will lag and then they turn. Yeah, hey, that's a bold prediction, that Ahmet. Absolutely. We could be going to all-time high valuation just to end up going lower. And that'll be interesting to see how they use the election sentiment and bring all that together. Yeah, we'll go ahead and unpack it. Let's get right to the business, guys. Lucky Cat been on NQ for years. Need a break? Yeah, I gotcha. Try S&P. A little slower. Momentum Trader SK, make sure volume is all the way up, as well as your computer volume. Awesome. Appreciate you, Tyler. Alrighty, guys. Let's get right down to the business here today. One of the things I want to emphasize here, I want to be very intentional with why I'm doing this here with you guys. So, of course, you guys know I want to share targets and highlight what opportunities I'm looking for going forward, right? But the biggest opportunity for you guys here is to take advantage of this opportunity to strengthen your trading approach by implementing a pre-market routine that's going to help you find consistency. Having a routine every week helps me stay dialed in and focused going into every new week, right? Since our trading performance rather is so dependent on the psychological side, right? Having a routine helps keep me sharp and focused so that come Monday, Tuesday, I'm ready to take advantage of the opportunities coming into the new week, right? So while the analysis itself gives me precision, gives me targets, help me trust why I'm looking for certain things, the biggest benefit of it is actually how it keeps me dialed in so that when I get to my desk Monday morning, I'm not foggy after messing around the whole weekend, right? I'm dialed in. I know what I'm looking for. And I'm in the right mindset to hunt down all these opportunities that are presented week to week in trading, right? So having a routine is what keeps you dialed in and focused. And you guys know what happens when we're not dialed in and focused as a trader. We start taking dumb trades, start doing all sorts of dumb shit, and we end up losing accounts. The way you get away from that is having a routine. Start acting like a professional, and the markets will start giving you rewards like a professional. So with that, let's get into it. I just want to touch on the opportunity here for you guys and what it is. SK increased my computer volume. Thank you, Momentum. Awesome. All right, guys, I see a few questions in the chat. Like I said, once I get through the analysis here, I'll get through your guys' questions here as usual, guys. All right, so weekly outlook for September 15th, 2024. So the economic calendar this week, the main show for this week will be the FOMC statement and press conference. Obviously, the interest rates is going to be highly influential over the markets. But because we do have medium impact news Monday, Tuesday, I'll be expecting decent action Monday going into Tuesday. And then again, the star of the show this week will be FOMC on Wednesday. And then after that, we have high impact news Thursday. So it really should be a nice technical week from the economic calendar standpoint, all the way up until Friday. No high impact news on Friday, so I'll probably look to have my business concluded by Thursday this week. And again, for those of you guys that may be new, we use the economic calendar as our roadmap to map out when I'm going to be trading, what days I want to be trading, because this is going to dictate what opportunities are presented to me, right? If the markets are rigged, if they're algorithmic, it's going to do the same things at time. And that's essentially all we're doing, right? We're taking advantage of these repeating phenomena in the market that occur every single week. So the assets we're going to be looking at today will be US dollar, treasury bonds, and then from there we'll go into Nasdaq, Dow, and S&P and look at index futures. So to start off, I always start with intermarket analysis, right? I don't trade dollar, and I'm not a bond trader. Do we have any bond traders? Any of you guys trade bonds? I don't know too many. I know a few people do, but I don't know if that's a big crowd that's trading bonds. But the importance of knowing what dollar and bonds are doing will be highly influential. Well, definitely if you're a currency trader, but even for index futures as well. So traders that are trading maybe stocks or index futures, you think, oh, I don't need to know dollar. I don't need to know bonds. But what it does is it gives you an understanding of intermarket analysis, right? Risk on, risk off. Where's money going in the markets? Where's capital flowing in and out of? And that's beneficial to understand regardless of the markets that you're trading. All right, so looking at the dollar, weekly order flow remains heavily bearish. As long as we remain below the weekly inversion fair value gap here, I will remain looking for lower prices, avoiding calling a bottom. So what do I mean there? Order flow is heavy, But what do I mean by it's heavy? Am I just pulling words out of my ass? No, right? Heavy means the algorithm's in a hurry to reprice lower, and we're seeing an inability to fill in gaps, right? Look at this fair value gap up here, right? Left that open. And if you guys remember when we were here together a month ago on YouTube, where was I calling your attention to? Below here. And that's in the Telegram. I know I shared the, these are weekly PDFs. I do this every week in my private group, but like I said, I've been doing it once a month here with you guys live. And if you look at the weekly PDF that I sent into the Telegram, we made this available for you guys. You'll see how predicting the future is something you can consistently do if you know how to read the markets, right? And then voila, here we go, trading below that low. So that'll be in there from last month. And you guys see we got the repricing there as well. So that's why I want to start doing these once a month with you guys, give you guys the insight, show you guys the routine so that you guys can begin implementing this in your own trading as well. So we see imbalance left open here, and then we have this fair value gap here. We've traded up into it, and we've done what? We've failed to even get to the midpoint of this gap here. Extending this gap through, which is an inversion fair value gap, we see we're staying in the lower portion of that as well. So that's what I mean when order flow remains heavy. It's indicating, it's signaling an unwillingness to even get up into these imbalances, which indicates the market's in a hurry to reach lower. So here we have the sell side liquidity at the 100.5 big figure number. And then through that, we have the external range liquidity on the sell side here at the 99.5 level as well. Right, so as long as we remain below this inversion fair value gap, I'm looking for lower prices. Market has no business getting above that if we're going to continue repricing to the downside. All right, daily time frame. So bearish institutional order flow on the daily time frame, right? Continuing what we're looking at on the weekly. Fair value gap, traded into, we respect it, we break down. Imbalance, trade up into, hit the midpoint, break down. Imbalance here, trade up into it, we break down. We retrade up into this imbalance, unable to fill these up here, and we're staying what in the lower portion here. So now we have these relatively equal lows. So again, equal lows on the daily chart are the short-term draw. And then we have the external range liquidity again at the 99.578 level. As long as, again, we remain below that weekly inversion fair value gap. So again, heavy bearish order flow. That's why we were calling dollar lower for you guys last month. And we're still doing the same. In the Sunday write-up that we do, this is beyond the scope of what I'm sharing here. Like I said, I could easily be on here 2 hours if I go into everything we're looking at, which is COT, seasonal tendencies, and how that supports what we're looking for. But that is touched on in our Sunday, what every trader needs to know blog posts that are sent out every Sunday. But like I said, that's beyond the scope of what I'm discussing here. But just understand the technicals are a big factor. In my opinion, the #1 factor. But the fundamental side of things, again, help confirm what you're looking at and validate what you're looking at on the technical side as well. So there is a blend of fundamentals and technicals. But in my opinion, technicals are king and fundamentals are helpful in supporting what I'm already looking at in the charts. And like I said, I know other people may have different viewpoints. Maybe you lean on fundamentals a whole lot more, right? There's tons of ways to make money in the market. We're just showing you how how my team makes money consistently every single month. Hourly time frame. Keep in mind what these two thick black lines are. I'm going to go back to the daily chart and show you what that is. You see those two thick black lines? Now we're going to see this transposed down to the hourly time frame. So you can see the black line here and here. So we traded up into the daily fair value gap this previous week, right? We've cleared out the short-term high here and traded inside that daily fair value gap. Also, looking at the yellow rectangle, we did what? We stayed in the lower portion of that weekly inversion fair value gap. What that's signaling is that the market's weak. Then once we get the breakdown and shift in structure, that further validates what we're looking for at these premium levels, right? So we trade higher, we run buy stops, and then we get an aggressive breakdown. So what I'm looking at this week is the hourly bearish breaker, which is right here. And this should keep price at bay if the market will reprice below the sell side liquidity. And all I have marked out here with this Fibonacci is the dealing range from high down to low, highlighting the range where it's permissible to retrace. So how far can we retrace and still be bearish? This breaker here, right? It's in a premium. We've already taken buy side here, and now we're already breaking down. And keep in mind, it doesn't even need to retrace as high as the breaker. It can just retrace, stay heavy, and keep breaking down. But last line in the sand for me being bearish will be the breaker, right? And what I do when I'm trading is I'm taking it day by day, right? Let's say the market gets above the breaker and we trade up through it. And that's giving me insight. That's not lost money, right? It's not, I'm looking like a fool on YouTube. It's insight, right? So if we start trading through this, am I still going to be going short? No, I'm probably going to look for higher prices. So it's about knowing how to read the order flow and be able to adjust with the new information that the market's giving you. And for those of you guys that are in the community, I was supposed to do a market review for you guys yesterday, but my schedule ended up filling up. So I'll do a brief review of the previous week and today's price action, which generally we do anyway, right? Because before we look forward, I like to look back because it gives us the context for what we're expecting. So I'll touch on that briefly here as well. And I was actually bearish index futures last week. Like when I first gave my weekly outlook last week, I was initially bearish looking for lower prices. But when you know how to read order flow and market structure, you're able to pivot on a dime because you know what you're looking at. And had no red days last week. Every trade was money. So it's not to say, oh, well, the weekly outlook was wrong, you must have lost a lot of money. It's about knowing what you're looking at and know how to invalidate or validate what you're looking for. And if you're able to do that, that allows you to be fluid and pivot as the market's doing the same. All right, so confirming what we're looking at in the dollar with treasury bonds, right? We see bonds pressing, or treasuries pressing higher. What that's doing, again, is treasuries delivering higher is confirming risk on for dollar, which means dollar is dropping and capital is flowing into risk assets, right? And this is further confirmed with bonds. So how did I know we were going to reprice lower on dollar? Well, I don't want to say no because there's no guarantees, but how was I confident in calling the dollar lower? Because of these supporting factors here. So we see treasuries repricing higher, which again, this is going to be the inverse of the yields. So if we have treasuries pressing higher, yields are dropping. If the yields are dropping, what you get for holding dollars is not as great of a return, which means money's flowing out of the dollar, right? So pretty straightforward intermarket analysis and what's going on there. Daily time frame. So we've seen the buy side delivered, right? So buy side has been delivered. Now I want to see how we trade above the highs to either confirm or invalidate continuation. So what I do as we get to each key level, I look for confirmation. I look for clues in the order flow. Is it signaling to me that we're going higher or that we've taken the buy side to now reverse lower, right? And that's indicated to me in the order flow as I wait for more information. So as long as, again, treasuries remain bullish, then that's going to support lower prices for the dollar, right? And then if that changes, then we'll have to adjust and pivot along with that. But again, we are seeing higher treasuries, which is supporting the lower US dollar. All right, so with that, getting into index futures, before I get into Nasdaq, which is the one I primarily trade, I still do look at all three of them from a relative strength analysis standpoint, and I'll get into that here in a moment. So daily time frame, we'll start over here with S&P, right? We drop lower, but what do we do inside this daily fair value gap? We were unable to break down through it. And then we found support, expanded higher. This fair value gap here, we traded to it and through it, which indicates to me what? The market is not weak. It's actually strong, right? So we've closed above that fair value gap, and now we have the buy side here and here for S&P. Moving on over to Nasdaq, right? ES is the relative strength leader over NQ. Why is that? Well, look at this fair value gap here on S&P, right? We found support here. That same imbalance here on Nasdaq, we traded clear through. And I'm looking at this one here on Nasdaq. I'll go into why I'm looking at that one. It's because it's the first fair value gap of the month, which is something that I guess ICT's been letting out of the bag recently. So looking at the indices comparably, we see Nasdaq's much weaker and S&P's showing much more strength based off how we're trading at these key PD arrays, right? So we see, again, Nasdaq having traded all the way through that level, and it's having more difficulty rallying. Still likely to rally nonetheless, but knowing which asset is stronger and which is weaker is really helpful, because when I'm trading and I have a weekly outlook and I have a bias, that's just my framework. I can go long and short in the same week, and many times I do. But how do I know which one I want to go short, which one I want to go long? This is just some of the aspects that I'm using to come to that conclusion. Daily chart for Nasdaq, we dropped down. We did trade through that imbalance, but what I was watching was this fair value gap here. And the reason why I'm using the volume imbalance there is because that incorporates the entire inefficiency. So extending that through, we see the bodies supported there. We found support. We rallied. This fair value gap here, that was not a short for us this week. We were looking for the market to trade up to it, through it, and then we're calling higher prices Thursday, going into Friday as well. And then looking at the Dow here, Dow has these relatively equal highs, and Dow is the strongest. I don't personally trade the Dow. So if the Dow's strongest, then that means S&P stronger than Nasdaq, and I'll just go into S&P. So just to answer that question, I don't focus on the Dow as much. But for Dow traders, we have the smooth highs here as a draw on liquidity. And then once we're at all-time high valuation, then it's time to use all-time high protocols, right? Expect higher prices until it doesn't give higher prices, and use standard deviations to get targets on the upside. And that's the best we got for all-time high trading. And there's other techniques you can use to get more precision with standard deviations. But like I said, that's well beyond the scope of what I'm discussing here. But just some things to keep in mind if we do get into all-time high valuation for Dow and indices here in the future. All right, so looking at Nasdaq. So previous week indicated the markets are bullish. If we see acceleration lower for dollar, this will confirm the bullish bias for index futures. So what told me we were bullish here in this week? Well, a couple things, but let me get to the rest of the points I have here. Now I'll get into the specifics. So since it is an election year, and with the geopolitical climate we are in, I will be taking it level by level and read the order flow to confirm what I am looking for, as sentiment can shift on a dime, right? That's a mouthful, but here's the main point. A lot of shit going on around the world, right? U.S. election, they tried to assassinate the man a few days ago, or a few months ago, rather. Taiwan, China, bunch of crazy shit going on in the Middle East. So like I said, a lot of stuff going on. These markets can turn on a dime if stuff starts picking up, right? So what I'm emphasizing to you guys here is, yes, these are my targets here, right? Yes, if we keep gravitating long-term, that's what I'm looking for. However, I'm very cautious of the climate that we're in. And I'm allowing myself to be fluid in my analysis and pivot, because it's a crazy year and the markets are no exception. So with that in mind, I want to be flexible in my analysis and not be stuck in a bias. And I want to let the market tell me where it's going to go and allow myself to be flexible in that way. And that's what I'm saying there. And when I say, okay, I want to confirm it with institutional order flow, right? Institutional order flow is a tool that I use frequently to confirm or invalidate what it is that I'm looking for, right? And when I'm speaking specifically with regard to institutional order flow, well, actually, I'll touch on that towards the end. I'll touch on that towards the end with institutional order flow. Let me just stay focused here with what I'm looking at on the weekly chart before I lose myself. Volume imbalance here, extending that through. We see the bodies respecting that. We have this wick here. Last week, I was saying, could we trade down into that wick? But then what I saw was the market traded down into the rejection block, which is the lowest body here inside this price swing, and then immediately started seeing strength. So what that told me, the reason why I have this dotted line on here, you're probably wondering why that's there. What I'm measuring is the high of this wick down to the low. And what I'm looking at is the 50% or the half. The fact that we were unable to even get down to 50% of that wick is a strength signature. Now, look at this entire body of this candle. You see how we traded up to and through 50%? Further strength signatures confirming bullishness. So what I'll be looking for in the next weekly candle, we can open drop initially, but then I want to see us expand higher aggressively into the swing high here, and then into that weekly fair value gap. Once we get there, I'm going to be patient, because it's an election year, and what's to say they don't just want to take it up there into that fair value gap and send it lower. So what I want to see is, once we get to that weekly fair value gap, I have to read order flow. And now what I'll have to see is how we trade, how the market is reacting and referring to these specific reference points in here. And that's what gives me the insights to measure, are we likely to continue, or are we likely just going up into a premium to break down? So strength in order flow, upside targets, not calling all-time highs until we start to see confirmation at the weekly fair value gap. However, longer term, that is what I'm expecting. Moving right along to the daily time frame. So we're seeing bullish order flow on the daily, and this will be confirmed as long as we remain above the daily inversion fair value gap. This imbalance here, like I said, that was not a short for us, or for my group last week. We were actually looking for higher prices on Thursday, mapping out the whole power of three and the whole business there. And then we look for continuation on Friday. So with the order signatures I was seeing in the order flow, again, that indicated to me what? The market is not bearish. Look for higher prices. And again, that's why we were looking for longs for the remainder of the week, once it confirmed it wasn't bearish in here. So this is the daily inversion fair value gap I'm referring to here. And I prefer to see the lower fair value gap left open and act as a breakaway gap to confirm bullishness. Right, so there's several things you can use to read and confirm order flow. One of which is inefficiencies unable to get filled. So this fair value gap here that's below market price, why am I saying I want to see us stay above the inversion here? Because if we're really bullish, I want to see the market aggressively get up into these highs, right? There's a lot of liquidity here, people that try to go short. So I want to see the market be in a hurry to get up there, and trading all the way down through these PD arrays is not as bullish as I'd want to see. So if we leave that fair value gap open here and we start to see an energetic price run higher, then again, that'll be additional confirmation that we're likely not only going up here to go down, but we're likely going to come up here and rip into these buy stops up here. So if they leave this gap open, watch for all-time highs. And that's how I'm weighing order flow day to day, week to week. So looking at this BISI here, this buy side imbalance, sell side inefficiency, it's permissible for the market to trade into that. But like I said, I want to see us stay in the upper half of the daily inversion fair value gap to confirm bullishness to the upside. What happens if we open and we just melt through all these key levels? Well, then that indicates something entirely different to me, right? And then when we get to that point, I'll have to pivot, adjust, and then I'll let you guys know what I'm looking for at that point. All right, dropping down into the hourly time frame here. We can see the reversal we had this week, and this is what I want to touch on from the previous week specifically. I already did on the weekly daily, so now I want to do it on the hourly here real quick. So as I said, as order flow was bearish here on the hourly time frame, I was trading along with that. So Monday, took shorts, banked. Tuesday, took shorts into the equal lows here and the equal lows here, banked. And then after that, I was neutral. I wanted to see, okay, how does the market trade below these lows? We ended up dropping down, taking the sell side, and then we immediately started ripping and displacing to the upside. So what I was looking at from a market structure standpoint was intermediate term high here, intermediate term high here, and then this would have been, well, this right here would have been an intermediate term high for me. So once we traded higher and broke down, now this high should never be revisited if we're going to keep selling off for the week. But then once I close out my trade here, make money, bank with the team, and then we reverse, now I have to pivot because now the market's not indicating to me we're going lower. We broke an intermediate term high here and here to the upside. And how do we break those highs? We do it aggressively with displacement. So that's why on Thursday, why we're going in here and we're hunting what? Long setups. But if we're bullish, we have to wait for the market to do what? Drop down into either sell stops or fair value, right? In this case, you have both, right? Fair value gap. Trade down into that. That prints the low of the day, right? We're watching that live. Market expands, close near the high. Same thing on Tuesday, or on Friday rather, right? Accumulation, manipulation, distribution, open low, high, close. Expanding towards the draw on liquidity. Other point I want to make mention of, if you see this daily imbalance here, which you can see here, the yellow rectangle, it's anchored to this candle's low, this candle's high, that's the fair value gap. Extending that through, what signatures here told me we're bullish? You guys know? Let me see if YouTube community has been taking notes. You guys know what in here indicated the market was bullish to me? Take a little break here. Close above 50%. All right, Joel. Yep. Anyone else? Make it a little interactive learning session here. Respecting consequent encroachment with the bodies. All right, Stanley, there you go. Bodies closed above consequent encroachment. Above consequent encroachment. Close above equilibrium. All right, awesome. You guys nailed it. Absolutely. Right, daily fair value gap. We've done what? We traded up through it. We closed above midpoint. That's the first indication we're likely going to get to the high. But then when I'm watching order flow this day live, right? What I'm seeing is the bodies doing what? They're staying in the upper portion here. So when I see the market drop down, what's that? The wicks are doing the damage, but the bodies are telling me the narrative that we're staying in the upper portion of that fair value gap. And that's what allowed me to trust longs are looking for higher prices into a daily volume imbalance, which I don't have here. I'll have to show it here. So if I put set on, here, give you guys some more free game here on the YouTube. So you see here right now, there's no volume imbalance, right? When you toggle set like this, you see now there's like magic, a volume imbalance appears. Take it off, it's gone. Put on set, it's on. So what I'm using as a target for this day, let me make that a loud, bright pink color. So when I drop down to the hourly time frame, you can see, right, open low, we're dropping down into here to do what? To reprice higher, right? And I was taking trades in the PM session in the lunch hour, just taking advantage of the repricing into that, right? But knowing why the market should draw where it's going, understanding the higher time frame, right? Why is the market repricing higher. And if you understand that, that gives you framework to now go into the lower time frames and find. One of the most common complaints and difficulties I hear from traders is I get lost on the lower time frames. I get into the lower time frames and everything just flies out the window. This is why you have to have a plan, right? You have to have a routine, something that roots you in the higher time frame. What's the higher time frame doing? Because then when you drop into your lower time frames, now you know what you're looking for. You know what to expect, why you're expecting it. And then you're not getting caught off guard by the Judas swing that we're expecting. We want to see that manipulation against what we're looking for. But a lot of the times that's tripping you up because you don't have higher time frame narrative. So if you focus on your higher time frame institutional order flow, and then you look at the lower time frame patterns and whatever you're looking for within the higher time frame, that's what's going to give you the results and the clarity that you're looking for. So getting back to the hourly time frame here, again, we traded higher. We broke these key intermediate term highs, and then the signatures here in the daily fair value gap. Really impressed that you guys are seeing all that. See, you guys are studying hard. Love to see it. Market's indicating what? It's strong, right? It's bullish. And then from there, we just keep expanding and gravitating higher. Not the cleanest delivery Thursday and Friday, a lot of back and forth, but nonetheless grinding higher into the equal highs. And then as my man Matthew mentioned, equal highs, absolutely, right? The only reason I would even expect this fair value gap to act as support is because we're gravitating to the equal highs up here, right? So the draw on liquidity is number one in determining where the market should draw to. And again, you guys can see that's my target going into this week. I'm looking at this as a market maker buy model. We're on the buy side of the curve. So keep in mind, we also don't have to give a deep retracement. Because we are so close to the liquidity here, the market may just want to accelerate and ramp up into those highs and target those traders with stop losses there. So a couple scenarios that I'm weighing out going into the session here this week. But again, we're on the buy side of the curve. I do like how these imbalances here are being left open, and I want to see them take it up into that buy side rather quickly. So that's the presentation here for today. That's what I'm looking at across dollar, bonds, and index futures. I did cover S&P and Dow there as well. So with that in mind, I think I have to touch on. Well, let me touch on order flow. I know I said I'd touch on order flow here real quick. All right. Let's make sure you got your notepad and pen out. So when I say, what do I mean when I say we should monitor order flow to confirm my targets or my analysis? Well, at a basic level, you can look at order flow through the perspective of which highs and lows are being displaced through and which are being rejected, right? That's a more basic way. Or are we respecting bullish fair value gaps or bearish fair value gaps? And are down close candles being respected when bullish, right? In a more simple way, that's how you can look at order flow, right? Lows, we rejected the lows and we're displacing through the highs. Also, are we respecting bullish fair value gaps or are we respecting bearish fair value gaps? Well, I don't see us respecting anything over here, so I see us respecting bullish fair value gaps to the upside. Second, are down close candles supporting price? Yeah, right? Down close candle, we don't even come back down to it. Down close candle, support, down close candle, support, and we keep gravitating higher. So in a more basic way, those are the only 3 to 4 things you need to really read order flow. At a more advanced level, you can read order flow using new week opening gaps, new day opening gaps, breakaway gaps, measuring gaps. Those are all signatures algorithmically that the market will use to communicate order flow to you at a much more advanced level. And then taking that one step further, you can look at every PD array and use quadrants on it, like order blocks, breakers. So you can even look at the quadrants on all those key levels for even more precision. But you can see if now you start to incorporate all those elements, this is going to require a lot more focus and a lot more attention, which is why I say, ICT says, it takes experience to trade at a high level. Because I can say this to you now, but if you haven't worked with myself, ICT for years, and worked with myself for a couple months, since I'm getting more right to it. But you can learn how to trade at a high level, but it doesn't happen overnight. Because you can see, right, there's a lot of information and data points available that you can use to confirm or invalidate what you're looking for. But it takes time to get experience working with those levels, seeing it done live in front of you to be able to eventually start doing it yourself. So here's the good news. You don't need to read price action at a PhD level to make money. But here's the even better news. If you want to read price action at a very advanced level, know exactly why you're looking for everything, then that precision is available to you as well. You just have to study a whole lot more, roll your sleeves up, and get to work. So I wanted to touch on order flow there with you guys because a lot of times I get asked, Dylan, all right, what do you mean when you're saying you have to watch order flow to confirm what you're looking for? Well, those are just some of the characteristics that myself and my team look for in the markets to confirm what it is that we're looking for. All right, so with that, guys, let's get into, I know I said I'd look at crude oil, and I think there's one other market, maybe gold, and then I'll get into your guys' lovely questions. So let me pull up the current month contract, CLV, right? Because we're in the October delivery. All right, so finally happy to see crude oil moving. While we were stuck inside this shitty range, the trading wasn't as clean for crude oil in my opinion. The way I like to personally trade is I'm looking for a higher time frame draw on liquidity, weekly, daily, and then I'm going down to my hourly chart, confirming it there. And then from there, I'm looking at 15-minute, 5-minute, 1 minutes within kill zones to refine risk really tight. That's a model right there. So that's what I'm looking for. So if I don't have clarity on the weekly, daily chart, it's not the end of the world, right? It doesn't mean there's no trades. It's just not my preferred style of trading. It's real easy to trade when you know where the weekly chart's going, the daily chart's going. You wait for the market to drop into a short-term discount. You wait for bullishness, the market to confirm that, which whatever way you look for it, and you go long, right? That's the easiest way to trade. But when you're in a consolidation, you have to be a lot more nimble, surgical. You have to read a lot more into the order flow signatures. So it's just a little more tedious trading within consolidation profiles. Possible, but you have to really know what you're looking at. So now that we're leaving this range, I like to see this, right? Because it's favorable for my trading. I like to see higher time frame expansion models, and that's what I like to trade. So now that we've left this range here to the downside, we've taken out the sell side, I want to see how we trade below the sell side, right? Because now we've had a run on sell stops. So now do we reject that and run to the high side, to the premium side of the range? That's what I'm favoring. Longer term, because I do see crude oil within the next few months being much higher, especially as we start to get towards winter, but that's another discussion. We've taken out the sell side here, which again, I like to see we've left that range, and I believe that's what my man Ahmed was saying he was banking off, the repricing into the sell side. Nicely done there, brother. And now that we've taken out the sell side, I want to see how we trade there, right? So let's drop down to the daily time frame. So again, we left the range to the downside. Sell side taken here. And now we've traded up through this down close candle. So what you'll want to watch for crude oil, let me make that black. I'm not really a big fan of that paint color. We traded down into it. Now we want to see, do we show responsiveness? Does the market start to show a measure of displacement away from the order block? And that's what I'd want to see if it's going to become an order block. And we're going to see the market trade higher. For upside targets for crude oil, we have the daily fair value gap here. So you'd want to have that labeled if you're trading crude oil as an upside target. But again, when I share we need for confirmation, we want to see responsiveness from the order block. So if we get that, then we could look for a run into the daily fair value gap. And then what'll confirm that we're bullish from the daily fair value gap? Well, the same thing I look for with every other gap, right? Well, first we need to get there. Then once we get there, I see how we trade there. Does it show willingness to close above 50%? Right? Do we get above it, use it as support, and expand higher? Right? So those are all the things I'll be looking at to gauge, okay, once we get here, do we continue? Right? Because as of right now, I'm just looking for a short-term run into the premium. That's TGIF. That's not important right now. So here's equilibrium, 50%. And then right above equilibrium. Why this gap, Dylan? This gap because it's right above equilibrium. So that's first target. But then I have to see how we trade there. Because as of right now, this is just a retracement into premium and into fair value. But then once we trade there, whether or not this is an outright reversal still has yet to be seen. So that's how I'd trade on crude oil. And again, if we start to get up through this here, then we have the buy side up here. And then longer term, we have buy side up here. So that's what I'm looking at for crude going forward. And then the last one, what was it? Gold. Forex.com. Right. So, what's it? Lucky Cat. Yeah, Lucky Cat. Looking at crude oil and gold. All right. go to the weekly chart here for gold. Right, we're seeing strength in gold, which is on the back of a lower dollar. Right, so if we've been calling dollar lower, looking for lower repricing in dollar, then we suspect what strength in the gold market. What I like to see, this type of price action here, I'm not really interested in because it's not usually low resistance. It's not directional, and it's a lot of choppy back and forth. But now that we're leaving this range, we could see more favorable price action on gold. And now that we're starting to see signatures that I like to look for, right? Expansions. Are we seeing fair value gaps unable to get filled? Yes, right? So those are things that start to indicate it's likely going to be a cleaner market delivery. So we've left the range to the upside. Because that's the first fair value gap after leaving the consolidation, I'd want to see that be a breakaway gap if we're going to be bullish long-term on gold, right? And gold's absolutely ripping. And again, that's going to be on the back of a lower, weaker dollar. So let's refine this to the daily time frame now. Okay. So that's an interesting statement because you're saying gold and crude oil is a market you're looking at over Nasdaq, but I look at this daily chart here for gold and look at this price action. And it's like, why in someone's mind would you want to trade this over something like Nasdaq, right? That's just so structured, clean price delivery, runs to very obvious clean levels. And in my opinion, this is the cream of the crop to be trading, as opposed to this right here. But hey, everyone's got their strategies. Everyone has what works for them, right? But in my opinion, Nasdaq's superior. But I know maybe not everyone has access to American markets. So daily time frame for gold, right? Like it's just this type of stuff here that I don't like. Like if I was trading gold, right, and I was looking for a reaction off this fair value gap, the fact that it comes down into it once, twice, 3, 4, 5 times, I don't like that. I like Nasdaq hits the immediately running to whatever it's going for. But like I said, that's my style. I know everyone has different ways of making money. So this fair value gap, we've held it. Look, the body's all staying above it, right? The wick's just coloring inside of it. From there, we're consolidating and expanding. So I'm looking for higher prices on gold as long as the daily order flow remains bullish. Because we are at all-time highs, you'll have to rely on fib projections, right? And using that to get your targets. So you can find intermediate term highs, intermediate term lows. And then within that, you can start using fib projections to the upside. And you can start to do that on several price legs instead of just one. And then what you want to look for is where are convergences at key levels. Man, am I sharing all this for free on YouTube? Yes, we are. So you see how -1 overlaps here and here. That's a strong draw algorithmically because, again, you have to take notes on everything I've said so far, right? When you're anchoring the fib projections, you want to do it to an intermediate term high and intermediate term low. That's specifically what I'm looking for when I'm doing it. And then what I look for is where we converge at. The reason I don't like trading all-time highs as much is because I'm already doing this when I'm trading intraday anyway. However, when we're trading inside of a range, I'm now confirming whatever PDA rate I'd be looking for inside the range, and I'm confirming it with standard deviations. But when we're at all-time highs, I don't have that. So all I can rely on is standard deviations. But here's the key. When you get levels that overlap like this algorithmically, that's indicating something's happening there. And that's likely going to be a strong draw going higher. And then when you confirm that with, look at this gap here left open, this gap here would want to see some of that left open and see us get into the 26.14 level for gold. So that's the business for gold and crude oil. I know we have quite a few gold traders, so don't want you guys feeling left out. So I got you covered. Lucky Cat, haven't traded gold in a while. More crude oil. Crude oil is a nice market. There's quite a few people in our community that slap gold around pretty good. So absolutely. All right, guys. So I think I covered the 2 markets that I needed to. Stanley, I'll go back to the earlier questions. Let me get to Stanley's real quick as a community member. So you mentioned first presentation, fair value gap for the month. What time frame are you calling out that fair value gap? So the levels of algorithmic price action, man, goes real deep, brother. You can actually use several for first presentation fair value gaps. You can use the first fair value gap that forms on a 1-minute chart, the first one that forms on a 5-minute hourly time frame, and they all have value in and of themselves. It's also not limited to time frames though, right? Because if this concept works on a 1-minute chart, then it also works on higher time frames as well. And one of the things that ICT is starting to reveal and make available to the community is not all PD arrays are created equal. Certain fair value gaps that form at time are much more influential than fair value gaps that form at other times. So day of week is important. Time of day the fair value gaps form are important, and not just for fair value gaps. All PD arrays have significance around time, which is why it's always been time first, then price. But ICT used to teach a lot more on price. Now he's teaching a lot more on time, letting the cat out of the bag, making things available that haven't been taught before. So it's not limited to just lower time frames. The first fair value gap in the month, if you backtest it, is also influential in and of itself as well. So that's why I was using this specific fair value gap here, because it was the first presentation fair value gap for this month on this time frame. But if I go to an hourly time frame and I'm doing analysis on my hourly, or on the 15 or on the 1 minute, then that changes. So it's just a matter of calibrating it to the time frame you're looking at, focusing on the higher time frame being the most important. And I can touch more on that in the community. Stanley, that's a bit more advanced, so we can get on those details when we have more time. We're relaxed on a Zoom call in the community, and I'll get you squared away with that. Momentum Trader, he's using that concept, but on the monthly. Exactly. José, gracias por compartir la clase. Para los que no podemos permitirnos tu formación, estos videos son oro. Muy feliz que realizan el value que estamos dando aquí y que te está beneficiando, José. Gracias por venir, hermano. Lucky Cat, looks like it's shaping up to be a nice week no matter what you're trading. Absolutely. Absolutely. Fall price action, beautiful. Beautiful, beautiful, beautiful. And those in my community have been seeing that. Ahmed, I've always used PD arrays formed in the macro. That's another one, right? Macro times, what's going on during those specific times for setups and PD arrays. Nice. Absolutely. Cobra, is there a reason ICT adds some volume imbalances in this fair value gap and not some? Every time there's a volume imbalance, the way ICT explained it is that you want to incorporate the volume imbalance, because what that's indicating is that whole range needs to be paid attention to. If there's no volume imbalance, then I won't incorporate it. I'll just use the low of the candle to the high here. But because there's this imbalance here, right, I'm going to use this entire range here. So that's the business there. Lucky Cat, so happy for Q4. Absolutely. Opportunities available. It's time to take advantage of it. Matthew, Adora is bilingual. Yeah, we sure are, man. Pretty diverse team. Hola, that's all I know. Hey, man, that's all you need, brother. Luckily, now we have translators, things to get you around. All right, I know there were some questions earlier. Let me go back and check those out. Make sure I'm not missing anything here. Lucky Cat, no, ES is a turtle. Yeah, definitely. But think about Nasdaq. I mean, the speed also depends on the leverage, right? So if you're trading high leverage, then man, Nasdaq make you want to puke up your guts. But you can also just reduce leverage on Nasdaq, and it'll slow down a little bit for you in your mind, right? Because it's all mental, right? The candles are all moving the same. It's just if we feel sped up, there's a reason for it. So we have to identify, okay, why do I feel sped up? Why do I feel rushed in this market? Am I oversized? Am I trying to take on too much risk? Am I trying to do too much? Right? Those are all things to keep in mind. Because trading should be a relaxing, calm experience, right? It shouldn't be exciting. It shouldn't be anything out of this world, right? It shouldn't look like a horror movie, right? It should just be relaxed, calm, cool, collected, another day at the office, right? Redeemed and restored. Hey, brother. Glad to have you. Cobra, do you still look at DXY for indices trading? Absolutely. Absolutely. And if you're trading index futures and you're not looking at the dollar, you're missing out on a lot of valuable insight, right? Why was I looking for higher prices here? And you can just, these are things you want to start studying. That's capital.com. I don't want that. Right? And you can see how Wednesday and the Thursday, we started rotating lower and breaking down hard on dollar. And then look at the influence that has on Nasdaq, right? Repricing higher Wednesday into Friday. And that's not only because of the dollar, but dollar helps me confirm and validate what I'm already looking for. So absolutely, you definitely want to look at, or I definitely do, and you definitely want to start looking at US dollar as you're trading indices. Because just as I've said before, but I know I'm not on YouTube that much anymore. Even when you're trading intraday, you want to also have the dollar open, because just like I'm doing this on weekly, daily time frames, right? If Nasdaq higher, I want to see dollar lower. Well, guess what? Price is fractal. So if I want to see it on a higher time frame, it also applies to the lower time frame. So intraday, when I'm trading and I'm looking for buy models in Nasdaq and S&P, I'm also communicating every single day to the community why we're looking for lower dollar, why this is all supporting one another. So like I said, it's not necessary. Can you make money and not look at the dollar? Absolutely. But again, it's just a matter of you have to come to terms with where do you want to trade at? Do you want to trade with precision, know exactly why you're looking for everything, or just have to rely on the numbers to kind of scrape you by? Precision trading does require a lot of focus and a lot of work, though. So I will say that. Dylan, which futures broker would you recommend, please? No prop firm, but for personal. So I use two. AMP for personal, and then I have a institutional account under TradeStation. So I can't say TradeStation on the personal side because I have an institutional enterprise account with them on TradeStation that I trade for my business. The treatment they give business clients is a lot different than they would treat personal. So I can't speak on TradeStation on the personal side, but I can speak for AMP. Very solid. Great fills. Don't have any problems with them. Commissions are real low. So for the personal side, I would recommend AMP. If I don't know something, I don't speak too much about it. So TradeStation, I only know the enterprise, the institutional side of that. I don't know the personal side of how they relate to like individual consumer clients. So I'm not sure on TradeStation on that side, but AMP is solid. I do use both of those. Not recommending any. I would definitely, I always have to say this. This is my disclaimer, Ahmad. Or Ahmed, so not directly to you, but yeah, not recommending any brokers. Do your own research. Make sure you know what you're getting into. You can lose money in investing, so I had to throw that in there. Jay, as you said, respected that hourly bitsy when we were looking at that example. Absolutely, right? So that's another way to even confirm what we were looking at. And the great thing is, confirmation can come in a variety of ways, right? Maybe I'm looking at this PD array. Maybe you're looking at a different one. But the great thing is, we'll both come to the same conclusion if we're focused on the right things. So maybe when I was sharing that example here and we were looking at, okay, why are we bullish? Maybe you looked at something else. That doesn't necessarily mean that's wrong, right? There's a lot of different ways to look at the markets and make money. The key is to find what makes the most sense to you. Matthew, thanks for everything, Dylan. Feeling equipped this week? Absolutely, brother. Looking forward to it. Denisha, don't forget to give the stream a like. Hope everyone's having a great trading week. Glad to have you, Denisha. Yes, if you guys could, please hit the like button. I know we get a lot more views than likes usually. So that tells me a lot of people just in here getting free value and not hooking a brother up, right? That's all I'm asking for. Just a like. Helps me out, helps my team out, and shows the appreciation for coming out here on YouTube for you guys. But I do appreciate you guys joining me here. Matthew, regarding volume imbalances, do you use them once a body has closed, both down and over top of it? Yes. So they're not, what's the way I want to say this? Once a body's closed above and below, it's been effectively balanced. But because the market's algorithmic, it'll still refer to those specific reference points in the future. So it's not like a direct answer. Like I still use them, right? Like this, for example, the weekly volume imbalance that we were looking at here that gave us the low of the week. Like you can say, oh, we closed above it and we closed down here. So maybe it's not important, but the algorithm will refer to it. So it's not to say I just toss them out the window once they've been effectively balanced, but the algorithm will still refer to those levels. But if you think about it logically, now let's apply one more step of logic. If it's an imbalance, a separation between where 1 week closed and 1 week opened, what's that going to be? A new week opening gap. So with new week opening gaps, with those, you want to go back as far as 60 trading days. They can be even more. They can even be used as a longer duration out, more than 60 days. But 60-day look back is a general rule of thumb for the most sensitivity around specific PD arrays. But when it's a weekly chart, I will absolutely use that. Absolutely. And experience will help as well with that, right? You'll see over time, oh, well, the market traded over this at efficiency, but look, it's still using it, right? And then you want to log that. And then over time, you'll get that experience working those levels. Lucky Cat, thanks so much, Dylan. Have an awesome week, everyone. You do the same. Thank you. Cobra, all right, thanks. Stop watching dollar because it didn't feel necessary, but I'll definitely start looking at it again. So don't let me throw you off, right? Because if you're already making money, don't let what I'm saying change what you're doing. Here's something you can start doing, right? If you're already making money, you're just looking at index futures. After market, when you're doing your back testing or you're reviewing that day, study index futures and study dollar. And you'll start to see how important that insight is. And maybe you'll decide you don't want to include it in your analysis and you're already making money with what you're doing. That's cool as well, right? A lot of ways to make money. Like I said, we share what we do, what gives us precision. So you can try that out. Maybe it's something you really don't want to implement. So it's just all about finding what makes the most sense to you. But it is extremely helpful for myself and my entire team. We use it to bank every month. Cobra, ICT used to use AMP. I don't know if he still does. Yeah, I think ICT used AMP. I think he used TD Ameritrade as well. I think he said they were dog shit. And I can concur. So yeah, definitely TradeStation or AMP are solid from what I've seen. Thank you, brother. Yeah, absolutely, man. Appreciate you joining, man. Cyclops, thank you for the insights, Dylan. Don't forget to drop a like, everyone. Absolutely. Please do. Like I said, helps us out. Unicorn Queen, thanks for the value, Dylan. Absolutely. Appreciate you joining. Thanks, Kroger. New week opening gap, new day opening gap. Absolutely. And really insightful as always. Thank you, Dylan. Glad to have you. Med ICT has mentioned those and it is on everyone's charts. What's that? The new week opening gap, new day opening gap? Or I think he's throwing quite a bit out this year. I mean, from what I see on his YouTube channel, it's 3 to 4 hour videos just about every day. What are you referring to there, Met, with what he's talking about? Like volume imbalances, new day opening gaps, new week opening gaps? Not sure what you're getting at. Matthew, right? Like they're the same thing. LOL. Exactly. So when would we just use the close of the settlement? Well, also remember, settlement doesn't just happen when we're transitioning from Friday to Monday. Settlement also happens when we settle each day, like Monday going into Tuesday, Tuesday going into Wednesday. So that's why the settlement prices are important. But for the new week opening, that's going to be an influential price level because it's where we're opening at the week. So it'll be fair value algorithmically. Jay, with the news, yeah, I think he mentioned 5 NDOG and 5 NWOG. Yeah. And that's something I think I touched on. Yeah, I think that was just in the community. So with regard to 5 new week opening gaps, 5 new day opening gaps, remember who he's speaking to. ICT's teaching his son, who doesn't know a whole lot about price action. So ICT's giving his son very easy, actionable things that he can follow. So 5 new day opening gaps, 5 new week opening gaps is a general rule of thumb for beginners. But he's even said himself, he goes back weeks back, even outside of the 60-day look back, meaning we're using new week opening gaps more than 3 months back. But imagine, like I said, you have to keep in mind who ICT's talking to, though. He's talking to his son. So is he going to tell his son, yeah, use 60 new week opening gaps, have at it? No. He needs to give him something that makes sense. So 5 and 5 is easy to manage at first. But when you get better and you start trading at a more advanced level, right, and you know what you're looking at, then I'm using 20 new week opening gaps back, right? I'm using 15 new day opening gaps back when I'm trading day to day. So again, you have to keep in mind who ICT is talking to. If you want precision, it's available and you can go back months back with those levels and the algorithm will still give you setups, just like I do every day in my community using those key levels. So again, just a matter of what you want to trade with. Do you need all those levels to make money? No. But if you want precision like we show you guys, then it demands a lot of work and organization. So again, it just depends on where you want to take your trading. Are you okay being average? Or do you want to trade at a high advanced level and make a shitload of money? Jay, with the news structure, looking forward to seeing which news will bring manipulation and distribution. Well, every day there's going to be manipulation and distribution. It depends on what range you're talking about. If you're talking about like the weekly range, Jay, well, then we could look for a low of the week, Tuesday going into Wednesday. But if you're looking at the daily range, there's manipulation and distribution every single day. So it just matters. It depends on what you're looking at, brother. Matt, I know we used to use new week opening gaps and now everyone's keeping them on now. Yeah, definitely. But, you know, it's just like hype, you know, because he touched on new week opening gaps, new day opening gaps. I've been using them in my analysis for the past year, 2 years, and really using them in an advanced level for a year now. And it just passes because it's hype, right? So when I was talking about it, 8 months ago, it was like a big thing. I think it was even trending on Twitter all over the place, and then it just kind of fizzled out, right? But then now they're starting to reintegrate them. I guess it's catching hype again. And with what I do in my trading, I'm making money. There's no hype around it. So that's the key. Find what works for you. Find what makes sense, right? Maybe that's just too many levels to manage, and that's what everyone has to figure out, right? What makes the most sense for each individual. Cobra's 2024 mentorships teaching about Wix are such a gem. Absolutely. A pleasure to be on the stream. Best of luck for the week. You as well, brother. All right, guys. I see the questions starting to simmer down. All right, no questions in the Discord. All righty. We are good to go, guys. Jay, the beef between ICT and Patrick, yeah. If you got extra time on your hands and you're already making money, then absolutely, man. The beef ICT and Patrick it's pretty comical. It's pretty comical. But if you're not making money, then you definitely don't want to be worried about ICT and Patrick all day. I'll say that. Sorry, guys. Hey, hope you guys enjoyed the session here this Sunday. Glad to be here with you guys. The email from What Every Trader Needs to Know will be out today, 8 p.m. sharp. So expect that. If you're not subscribed to the email list, I would suggest doing so. And get that to your inbox every Sunday. In addition to new insights, we're going to be sharing there as well. Med trading should be boring or you're doing it wrong. No doubt, brother. No doubt. All right, guys. Going to leave you guys off with that. Have a great rest of your Sunday. Good luck. Good trading this week. And I'll see you in the next one. Take care.